Welcome everyone, it's the start of the webinar. My name is Sean Blanda. I am the VP of Content at Crossbeam. And joining me, CEO of Crossbeam, Mr. Bob Moore.
Hey everybody, I am so excited about this.
So we're excited about this. This is like our Super Bowl. We look forward to this every year. This is the third annual version of this report. We're excited to walk you through it. So let's talk about the structure of this webinar. We'll start about who we are in case you were forwarded this link by a friendly collaborator. Thank you, welcome. We'll explain some context. We'll talk about the survey. Who did we talk to? What are their common characteristics? Where, if anything, there'll be any not biases in the data, but where is the data overrepresented or underrepresented? And then we'll get to the juicy part, the 5 key findings, the things we learned, and then we'll open it up for some Q&A. And before we get started, I'm going to state the obvious. This is pre-recorded. We're coming to you from the past. And one of the reasons we're doing it pre-recorded this year is we can actively answer your questions as we present, so we don't stop and start. So if you have any questions in the chat, we are watching. We will answer it the best we can, but we'll kick it over to live Q&A at the end. Bob, anything to add before we get started?
Just that I just realized when we watch this, you're going to force me to watch myself live for the better part of an hour. So I'm going to brace for that. But yeah, we're keep the chats coming because we'll be active in the chat while we're also active on screen.
Cool. So who we are, who put this survey together? We are Crossbeam. We are a partner ecosystem platform. Bob is going to take away some of our most common use cases and what our customers and users use this for.
Yeah, Crossbeam, if you're not familiar with us, at our core, we're really just a company that's set out to solve this age-old partnership problem, which is how do I collaborate in a data-driven way with my partners when my data is in my data silo and their data is in their data silo? It's shocking how hard historically it is to answer questions like, how many customers do we have in common and who are they? Or are my sales reps currently trying to sell to any of the same companies as your sales reps? The age-old practice around that is known as account mapping. And the age-old way to do it is to email a bunch of spreadsheets around or just don't share any data and make your partnerships impossible to quantify. So Crossbeam solved this problem. We kind of created this category around the modern partner ecosystem platform. And what we really do is almost serve like an escrow service for data that sits in between companies who want to collaborate with each other and provide this secure third-party environment where each side can hook up their CRM system or other systems of record or connect their Google Sheets. Crossbeam takes care of all of the gnarly data ingestion and processing and being able to compare and match. And what you get out the other side is this data layer that you've never had access to before. It's the real-time, automatically scaling, automatically growing with your ecosystem account mapping report, and all of the amazing stuff that you can do downstream from there with pushing that data back into everything from CRMs to CDPs to data warehouses to everything in between. So yeah, what you're seeing here is just a screenshot of clicking on a partner, looking at this account mapping matrix to show customer overlap in this case, and then being able to even drill down into what those accounts are and take some action on them. So wildly enthusiastic about the progress we've made. We're now north of 7,000 companies that are on the Crossbeam network, if my calculations are correct, which is kind of mind-blowing. We grew that number by, I think, about 5x last year, and that's only been accelerating throughout time. So back in the day, you used to kind of have to bring your partners with you 2 or 3 years ago on Crossbeam. Today, if you sign up, I guarantee you've got some partners already on and you can be connected on day one. So it's been really enthusiastic, and I know many of you in the audience are on that network, and we thank you for that.
And we have people tell us all the time that Crossbeam is their de facto first step before partnering. They just want to see the overlaps in Crossbeam. It's a good, low friction way to vet your partners, see what kind of motions you should take afterward. And we know this is true. We're not just making it up because in our survey, we're seeing the results. We're sharing the first little morsel from the survey, which is the percentage of respondents that use Crossbeam have increased every year up to 46%. So we're seeing awesome growth in the ecosystem. So if you haven't joined Crossbeam, you can go to crossbeam.com and sign up for free.
And this is a great parlay into about the survey thing too, because a lot of companies, when they do these industry surveys, you would expect that number to just always be 100% because you kind of just like survey your people, right? You survey your users or your audience. That's not what we do here. We go far and wide. We partner with communities throughout the space. And I think what we're seeing here is certainly Crossbeam's growth in adoption and awareness, but I'm excited by the fact that it's below 50% because it means our content team is doing the hard work of getting out there and not just existing in our own echo chamber, but telling statistics about the entirety of the industry, even the people that we don't work with yet.
Speaking of the survey, let's talk about what it consists of. So from October 19th to December 10th, so again, this is late 2021, late last year when these responses came in, we surveyed 433 partnership professionals. If you read previous reports, I want to call your attention to that 433 number. That is significantly higher than past years. Last year, we surveyed 174, so more than double. Of the people who answered the survey, 95% were in B2B, 81% were ISVs, 70% are in customers or companies with 100 employees or more, and just over half are US based. So the partner world and partnerships can mean different things to different people depending on where you're standing. This is the viewpoint, this is the most common viewpoint of which people are answering the survey questions. So keep that in mind as we present our finding, that it is representative of largely these groups. Okay. And the other unique thing, this is our third year doing this. So they say 2 is a coincidence, 3 is a trend. We can start to put together movements in the data, see what is an outlier, see what is in trend, see what is raising, see what is falling. And you're going to see that as we present some of our key takeaways. In fact, let's share 5 of those key takeaways. So the report is about 64 pages long. There's lots of things stuffed in there. This is only 5 things. There's so much more stuff stuffed into the actual PDF. So these are the 5 key findings, and we're going to hit these one at a time. Job switching, increased salaries, the impacts of integrations, org chart insights, and then the optimism about job security. Bob, you ready?
Let's rock.
After we crunched the numbers, this is the thing that stuck out the most. So we asked respondents, how long have you been in your current role? Far and away, the largest group has been in their role for less than 1 year. So maybe you're watching this and going, yes, I just got into my current role. This means that more than half of the people in this industry by our survey switched roles in 2021, which is a crazy thing to think. In 2021, that number was 43%. In 2022, this current survey, it is 54%, so a big spike. But we don't think this is a big surprise if you're paying attention to the macroeconomic trends. You know, we hear a lot about the Great Resignation, people reconsidering their careers, shuffling jobs in the wake of COVID-19 and all the changes in our lives and working styles that have come since then. We think that is, or we know that is definitely reflected in the partner ecosystem. So Bob, you lead a tech company and pay attention to the partner ecosystem. What's your take here?
Yeah, I think this is a confluence of factors all coming together at once. And I think really culminating with this statistic you see here, which I almost feel like I would expect to be the peak of where this number hits for us. I'd almost expect it to kind of steady back down to those previous levels in future years, but so much was going on over the course of the last year to cause this. You mentioned the Great Resignation. There's these macro factors in place where just generally speaking, the move to largely remote work at most companies, which is particularly true in the tech industry, which is overrepresented in this report, just creates a situation where the number of opportunities present in general, or that might be applicable to any given person in the partnership world, or in the job universe at all within tech, is higher. And that's an input to this Great Resignation. It creates a lot of job switching, creates a lot of kind of reshuffling and restabilization of people in their roles and their careers. So that's one factor. The other factor, and we're going to talk about this in a future point, is there's been a lot of momentum around just shifts in compensation in general. The inflationary effects that are talked about a lot on a macro scale have some ripple effects into how much people are paid and how people are compensated inside of their roles in general, again. And I think some of the collective knowledge out there among people considering switching jobs is it's a whole lot easier to get paid more by going to another company than it is for trying to advocate for a raise internally. And I think there's a lot of folks that had multi-year tenures in certain roles that it just kind of made sense for this to be the year where they make a switch because of the combination of 1 and 2. But both of those things are macro effects. They're not specific to partnerships. There's another thing in here that I think is going on that is specific to partnerships that's further exacerbating this, which is the way that people do the work of being a partnership professional is changing. The existence of solutions like Crossbeam that add a more data-centric attribution-centric layer to how people do this work, to how they identify where and how they're creating value, to how they measure it and justify it, not only does it increase the ceiling of where you can get as a partner professional because it puts you a little more in the game, but it also increases the enthusiasm of companies about starting up partner programs. So, an alternative thesis to this, hey, there's a lot of people with less than 1 year of tenure, would not just be that people are switching jobs. It would also be that there are a lot of people in here who have never had a partnership job before, who just started their first year in their partnership career. And that's because net partner teams are growing faster than ever in general. And why are we adding new partner jobs? Because of this revolution in how partner work gets done and this rising tide of the partnership space. So you add all three of those things up and you get perfect storm in this data. My projection for next year is that this comes down a bit and looks a little more like it did in 2021, but still a lot of movement underfoot here for sure.
And you mentioned a lot about numbers and data and workflows, and that stuff matters, but there's also the soft skills human element of this that I hope if you're watching this, you keep into account. If you move jobs or your partner move jobs, they can take parts of their ecosystem with them and replicate that in their new gig, right? So being easy to work with, being fun to work with, being trustworthy, all things that are important to be a partnership professional. And this just shows how common it is that the person you work with at one company could move and de facto you have a new partner when they switch jobs, which is pretty cool to see. Okay, Bob mentioned a little bit about compensation. Let's go to our next key finding. So we talk about the macro climate. Increased VC funding is something we heard a lot about. All you had to do was just kind of glance at TechCrunch or LinkedIn, and I'm sure you saw the funding announcement coming fast and furious. Something we wondered is, how did this impact the individual lives and compensation of partnership professionals? So first, let's zoom out. This is not our stat. We took this from our friends at CB Insights, but they chart the global venture capital funding market from year to year. There was a 111% increase from 2021 to 2020, which I think scientists would say that is bonkers. So what effect does this have on the individual is something we were trying to figure out. So did VC money affect compensation? The answer is sort of. Can you guess in the chat right now, what do you think the average compensation is for a partnership professional? This is regardless of seniority or geography or tenure. If you just have to guess average, would love to see what you think it is. Bob, while the people are guessing, what is your take on the increased venture capital environment?
Yeah, I mean, this is there's an elephant in the room aspect here too as well, which is in recent weeks, there's been a lot of tightening in the public market, specifically around the tech sector. We've seen valuations from a revenue multiple standpoint come kind of tumbling down by as much as 30 to 50% in a lot of public companies. And I think a lot of folks that have been watching the tech market over the last several years kind of saw this as an inevitable corrective step that's probably a move toward healthy, rational movement. But what that then creates is, something like, looking back at 2021, being able to see, holy moly, a whole lot of money got put to work here. There's like a macro micro thing. So at the macro level, just this, the combination of the quantitative easing and low interest rates kind of feeding a lot of money into markets in general, private equity and venture capital being a source of outsized returns that were kind of scarce in other markets, just pushed a lot of non-traditional investors like hedge funds and the like into putting money into venture-backed companies, which then supply and demand basics, kind of caused a major increase in the price of those assets. So much so that it was kind of out of whack with the actual fundamentals of business valuation. That's a long-winded, kind of wonky way of saying startups got really hot and became a really great category and place for a lot of people to put money. And it drove prices up. And you drive prices up and valuations get bigger. Valuations get bigger, you got to put more money in to own the same percentage. And it's a good thing because there was a whole lot more money to put in. So you get this compounding effect of companies getting more money earlier and earlier in their trajectory. I think we're seeing a very appropriate correction happen in the public markets and starting to ripple into the private markets for that. But in the meantime, we had this beautiful little era of mildly irrational exuberance there. And that's not just for founders that want to have a lot of money on their balance sheet. That trickles through to team members as well and plays into this great resignation and compensation stuff. So what did we see in the partnership world?
$167,000 roughly is the average salary of the average partnership professional. In a vacuum, that could mean a few things, but when we compare it to last year, it is up roughly $4,800. So internally, we asked ourselves, is this reflective of the VC investment? And I think the honest answer is we don't know, but it's certainly increasing every single year. Now, this is one area where our 3 years of data isn't quite enough for us to draw a conclusion because the past 3 years have been extremely tumultuous. And again, this number is inclusive of all seniorities, all geographies, all kinds of partnership roles. Just if you answered your salary, this is the just average of all those answers. But let's get into some of the details around this number and break it down by some of these other characteristics. Before we do, I just want to mention, we asked respondents, what do partnerships have an impact on? And 92% say revenue. So that would stand to reason, if that is correct, we should see this number continue to rise. And if we continue to see people invest in partner ecosystems, it should continue to go up. Okay, so let's break down this compensation a few ways. And Bob, please interrupt me at any point. I'm going to rapid fire a few fun compensation facts. This piggybacks on the first learning, which if people are switching jobs or we're hiring more new partnership professionals, we saw an increase in the average salary of people who've been working less than a year. So this suggests that of Bob's two theses, it's more people switching jobs than net new people getting partnership jobs. This is what we're guessing from the data, but this suggests that companies are paying top talent for partnership leaders. Bob, what do you see when you look at this?
Yeah, again, I always try to think about what are the trends behind the data that might be impacting this. One of the things, it's not surprising to see some correlation between tenure and salary, just because of the effect of, if you are new to the space, inherently you have at least as many years of experience as you do years of tenure, right? So like you would think that switching aside, normally what you would see here, that would influence this data enough to have it be a smaller bar and then a bigger bar and then a bigger bar, which you kind of see in the first three. But what you have here is a big first year bar, and that's pretty fascinating, and I think does support the job switching argument. I think you're totally right. And then yeah, on the overall increases in the dollars, like depending on your take on what inflation was last year, I'd argue that the salary increase that we saw in our data was modest to the point of being slower than inflation, which is surprising.
It could be flat. Yeah, correct. Yeah.
Yeah, flat to slightly negative. But I think again, like the thing I think about here is our universe of respondents in this survey grew so considerably, and the rate at which partner teams were growing and inherently then hiring an increasing number of junior ranks in who they were bringing on board, I think may have just created like a compressionary effect there. And I think the next slide that we've got is actually more about compensation by role. And I think that maybe tells, a little bit more of a story around, how compensation evolves as you develop more tenure here.
And something I'll add, this is the highest this number has ever been. So people with tenure with less than 1 year, this is by far the highest it's been in the past 2 years. So, compensation by salary. Vice president is the highest paid seniority rank, which makes sense if you're in the C-suite, you're probably on the founding team, you're taking less salary in exchange for equity. This kind of scans, though we're seeing an increase in C-suite partnership roles, including like chief ecosystem officer. So something we're going to watch in years going forward is the C-suite.
I don't like this co-opting of the CEO acronym.
CEO, the other CEO. If you Google that, that's an article that we wrote about that role. But you look at the associate level, analyst level, which is what Bob described. That's coming in at less than 100K on average, and you can see there's a huge step up from manager to director. Keep slicing the compensation data. We did it by geography. So because we had so many respondents this year, we could go further in the geographic splicing. So the United States, again, at 60%, the average came in a little more than the average for the entire survey, which is 177. Our friends in the UK, 150. Our neighbors up north, slightly more, 153. California is the US state that had a statistical significant enough respondents with the highest salary. And then definitely a lot of concentration of tech companies in New York, and that comes in at 150. Something that it had us wondering, though, is what is even geography in this age of work from home? So one thing we're starting to think about is, should we even be slicing things by geography? And let me walk you through quickly why we think that. We asked people, do they work remotely or in office? 65% work full-time remote, 31% work hybrid, which is a mix, and only 4% are going into the office regularly.
Wow.
So
yeah, I mean, it's not surprising. You know, even like thinking about, this is probably about what the breakdown is inside of Crossbeam when you really kind of look at it. Maybe even slightly less on the hybrid side. But yeah, this sign of the times, right? If you, and I believe we had this data from the tail end of 2020, it would have been literally 100% remote, like every office in the country.
Yeah, I believe it was 96% or something like that. Yeah,
but it speaks to the potential permanence of this cultural shift that we've had, right? I think the bigger question is, and I always love your hot takes on remote work, Sean. You know, do we think this is the stable state, or do we think we're looking at a number that's still in flux here?
So something we saw in the report, it's not in this presentation, we won't get to it, but we asked people when it comes to the return of events, do they want to do all in person or all virtual? And the answer is similar to this, which is hybrid is continuing to go. People want to mix of both. They want to be able to go in person, but also they don't want to have to get on a plane every time they want a conference. So I think we're going to see the truth in between somewhere, right? A little bit of in person, a little bit of Zoom.
It's great to, I think my answer to that question is like, I want to go to the events that I want to go to, and I want a really good excuse for not going to the events that I don't want to go to that's not going to offend people. And I think that's, you could make that argument about, you know, how often you go into the office too. And I think that's where a lot of people are finding their happy middle.
So that for compensation purposes, if California workers move out of California, do they still get California salaries? We don't know, but that's something we're going to keep an eye on. When we talk about offices, we asked last year and this year, did your office close? And last year, 37%, so more than a third. That has declined to 23% this year. But that's still a significant number of offices closing, 23%. So again, what happens to the comp if there is no headquarters? How do companies rethink this? This is not exclusive to the partnership world. This is, you know, the whole world economy will be considering this, but it's something we're thinking about and we want to track as we measure this stuff. Bob, do you have anything else to add about any of these compensation numbers?
No, I think my gut is that all of these things are moving at rates unprecedented in at least our professional lifetimes. And the fact that we're able to do this survey every year and look at it, those kind of trailing rates over time is very exciting to me, because I think we'll know when it's stabilizing. But based on the last two dots on the line here, I think we're still, you know, there's still quite a bit of velocity behind these things.
And if you're watching this and you go, okay, what do I do with all this? We have great stories of people who've watched this webinar or read this report and used this data to get paid fairly based on what their peers are getting paid. So download the report. We've spliced the compensation data in more ways than you see here, and see if you can use it the next time you have your performance review, your annual review, your pay review. Also, if you're a hiring manager, you get a sense of what the stakes are and what the market is saying you should be paying for different roles.
Totally. I think there's you know, as a founder, and particularly when you're venture backed, you get access to a wealth of tools around compensation benchmarking and being able to look at salaries in different areas, and partnerships, business development, alliances, channel are just like woefully underrepresented in all of those tools and surveys, and the data tends to be spotty and low volume. I think in this survey we may have the most substantial representative sampling broken out by a number of different dimensions that exist around partner professionals, particularly within kind of B2B and with a skew toward like ISV and tech partner managers. Yeah, use this thing to make sure that you're sitting in the right part of that bell curve.
And you know, tell us if you do that. We'd love to know. Okay. Key finding number 3, the impact that integrations have on business remains elusive. This is a quick one, but this is something that came up as we crunched several different questions. So what we're about to talk about is very specific to tech and integration partnerships. So if you're on the channel exclusive side, this may be less relevant to you. But just quickly, we wanted to point out something we saw, which is this comparison of graphs raised our eyebrows internally. So we asked, what do partnerships have a measurable impact at your company? And churn was 58% said, yes, our integrations have a measurable impact on churn. But then when we asked the more specific question, can you tell us the percentage that people that use integrations are less likely to churn? That number is at 57%, which these two things don't quite match. So to us, this is one of the biggest issues facing those who helming tech and integration ecosystems, which is one of the primary business values of this work is unquantifiable to many of the people doing it. And that's something we were thinking about a ton here at Crossbeam, which Bob, I know you definitely are thinking a lot about this.
Oh yeah, I mean this speaks to, we see this every year and we pull a different version of this anecdote out, and I think churn's a great example this year, but it just kind of speaks to usually the way that we tell this story is around the frustration of partnership folks who know deep in their heart of hearts that partnerships are moving the needle to the business, but don't believe that the people around them feel the same way, and obviously have no ability to quantify that, or limited ability to quantify that. This year I find it extra interesting because it actually shows a internal cognitive dissonance that exists inside of the people answering this survey. Like we said, does partnerships have a measurable impact on churn? 58% said yes. Then we said, what is the measurement of its impact on churn? And 57% said, I don't know. So like the math literally doesn't add up. Like there's some subset of people who have a belief in this quantifiable thing, but an inability to quantify it to the point where they'll still answer yes, right? So what this means to me is just this, speaking kind of with my Crossbeam centric view of the world hat on, like this is market opportunity, right? This is where we think about if our role is to make partnership professionals more successful, give them a better handle on how to spend their time, generate better outcomes for them, and allow them to measure the success of their work better. This is a gold mine staring us right in the face because this data is there. Once you've got Crossbeam connected and you have visibility into your entire partner ecosystem and the intersection of customer bases and sales pipelines and churned account lists and everything else with your partners, and the ability to view that over time, then attribution is a very natural downstream output of that. And that can be attribution back to closed won sales, to upgrades, and to churn prevention. So like this is data that's at our fingertips. This is data that we'll be building kind of stuff at the application layer around over the course of this year and beyond. But it just tells a story of how incredibly large the value being left on the table by missing data is for everybody that's in partnerships today.
And this isn't like only retroactive, but it's also, we can look forward. And what I mean by this is we've written articles. If you Google, I think probably maturity, churn, Crossbeam in Google, it'll come up. The people who are able to prove the integration's impact on churn are far more likely to get the resources they need, whether that's headcount or compensation or budget for tools, than those that don't. This is like the thing that unlocks everything else if you can figure this out. So next learning, org chart structure is clearer than ever. One of the most common questions we get at Crossbeam is, I am starting at this job. How do I set up my team? Who do I hire? How many people do I hire? Where do we report to? What is industry standard here? One of our most popular posts is when we just took 3 sample org charts and kind of had people walk through their decision-making process. So we have done this for 3 years and we're noticing remarkably stable trends, which I think we're going to get close to calling best practices, including where do partnership orgs report into? For the 3rd year in a row, sales is number 1, and that directly to CEO, which is number 2, tends to skew for these smaller companies. So for people probably hired at the VP or head of partnerships level that report directly to the CEO to spin up an ecosystem. And then it trails off from there: marketing, product engineering, customer success. Bob, does this scan with what you see when you talk to our customers?
Yeah, absolutely. And I would bet, if you take that 26% and you fast forward all those companies 5 years, it'll turn into 2% still reporting directly to the CEO, and the rest of those will kind of trickle out to the same exact distribution here. So it's all kind of converging around partnerships rolling into sales. I want to also remind everybody, this survey group is full of B2B people that work on at ISV companies, right? These tend to be companies where technology integrations are a major part of the partnership strategy, and where kind of the tech partner to tech partner relationship is one of at least the dominant threads around how they define partnerships. And historical conventional logic would be, look, if you have a big channel sales organization, it rolls into sales. If you have a big tech integration organization, it's going to roll into maybe marketing or product, because that's more of like a tip of the spear for product enhancement. That is just not not proving true anymore. And we're seeing these ISV organizations also accrue into sales. And you know what? We're not surprised because the one storyline that I think we've been telling since the very beginning of Crossbeam is this grand convergence of the separation between channel and tech and channel and ISV partnerships is kind of a false dichotomy, because if you're doing it right, your tech partnerships have all of the upside that a regular channel partnership has. You can still co-sell, you can still co-market, you can still cross-pollinate leads, you can still help each other grow your businesses considerably. And like tech is the new channel, right? Is the buzz phrase. So, as we see more and more of these tech partnership groups rolling up into sales organizations, what we're feeling is that vision that we had several years ago is kind of coming true right here in the data, which is there's this definitive confidence that companies have that this stuff is valuable enough to actually moving the top line revenue of the company that it ought to sit inside of a sales function, even if it involves building integrations and engineering efforts and other things like that. So this is very telling, and I think supportive of kind of the bigger picture that we've been sharing our thoughts on for a couple of years now.
So even here in pre-recorded land, I can hear you asking, how many people are reporting to sales though? Is it just me? Is it a whole group? Is it 10? Is it 20? This is the most common team size, is 2 to 5 people, followed closely by 10 plus. This is the third year in a row that 2 to 5 is the leading team size. Now, I can also hear you saying, this means nothing to me because my size of my company could be anything from 10 people to 1,000 plus people. We have you covered. We mapped team size by company size. So we're going to go through these one at a time real quick. The blue dots are teams of 1. You can see they are heavily concentrated in company sizes that are smaller. Makes sense. And then we get to the red dot, which is 2 to 5 employees. Spikes at 100, but then still stays steady until falling back to the pack at around 1,000. And remember, the most common company size of the people that answered this survey was 100 plus, that 100 to 249 range. So that is reflected in both data, the team size, as well as the company size. Then we get into the teal, that's 6 to 9. Not very common at any stretch. Seems like once you go to scale a partner team, you go quickly from 5 to 10. And as your company gets to 500 employees or more, a team size of 10 comes up. And when you get to 1,000, it is by far the norm. That is a lot of things to parse. So I hope you find where your company is in team size and see where you stack up. Bob, what do you see when you see this?
Yeah, the one thing that always jumps out at me here that I love, if you can go back to that last slide where you kind of see the dip in the chart at 6 to 9, here's what this is telling me. When you get to 6, you're going to fly past 6, 7, 8, 9. You're going to, by the time you've justified having a partner team that's got more than 5 people on it, you are no longer in this ad hoc firefighting mode of, you've got a small scrappy team where everybody's doing a little bit of everything and getting stuff done. You have figured out how to scale. And when you're going to scale at 6 people, by the time you've justified that, justifying 10 is not that far away. So I think what you're seeing, that dip in the 6 to 9 breakdown, is just a function of only 12% of the company life cycle time that gets spent where you have that specific number of partnership professionals exist. By the time you're there, you're racing toward 10, and then people just accrue to that 10 plus category. So I think what you're seeing right here is a little bit of this journey of our own ecosystem maturity model, which is you can kind of be like an explorer, a one-person show at the beginning, and you grow into more this connector, things are getting going. But then once you've instituted the tools and the systems and the measurement and kind of the reporting structure and everything else to get to 5, you're on your path to supernode territory, and you jump to 10 in almost no time. And I would encourage everybody to frame their own company's progress in the context of that maturity framework, because I think it really helps drop you right on this map.
And if you go to maturity.crossbeam.com, you can take it for yourself. It's focused on tech and integration partnerships, but we hope to expand it to all kinds of partnerships. But the way we frame that maturity is by scalability and automation. The more things that you are not doing manually and not doing ad hoc, the more mature you are. And that's reflected in this off to the races team size increase. The moment you have the workflows, you can prove they work, you can prove they impact the bottom line. You can ask for all the headcount you want, and you know that $1 to you produces $4 for the business. Okay, that is ecosystem ops. So again, very stable. We're seeing all these things across the past 3 years. So we're starting to kind of codify the modern partner team. Let's end on a super positive note. Our fifth most key finding is there is more optimism about job security. So it has been a tumultuous 3 years since we've been doing this. We asked the respondents, how would you describe your optimism about job security? And this year, you can see 51% are very optimistic, which is incredible. 31% are at least somewhat optimistic. So if you combine those two numbers, that is 82% of the people that answered this are at least somewhat optimistic about their job prospects, which is incredibly encouraging, especially given, again, the past few years we've all had. So what does this mean in context? In 2021, people were saying it's 82%, at least somewhat optimistic. We compared that to our 2021 report, which the answers came in 2020, right, in the heat, in the middle of the pandemic. And if you want to feel good about the world, this is it. Only 31% were somewhat optimistic when we did this for the 2021 report, and that spiked all the way to 82% for the 2022 report.
Yeah, talk about volatility. I mean, you're looking at it. I'd say with this metric, I wouldn't be shocked at all to see this number settle down into somewhere between these two numbers in the year or years to come. But this. What's sitting behind this is, again, a confluence of so many things, because not only is it the pandemic, the shift in the pandemic and the rollout of vaccines and the kind of light at the end of the tunnel mentality that kind of has existed among folks as things are starting to go back to in-person, et cetera. But it's also the salary increases. It's also the competitiveness in the job industry and the amount of team switching. If you've been at your job for less than a year, you're in the honeymoon period. Like that's a high likelihood that you're going to be feeling great about your position, right? And that was most of the people in this survey. So this is a big jump that I think is good for a good mentality. But again, here, like if you think about even that elephant in the room we were talking about earlier, and kind of, rate hikes coming in 2022 and that impact on the valuation and venture funding landscape out there in the tech sector, I think more and more pressure will start to exist around bringing things back down to rational reality in terms of the operational side of tech businesses. And, that'll apply some throttling to this number, I would bet, over the next year.
And a thing we write about in the report is there are a lot of indicators of positivity, this job security being one, increased salary being another, tools being available more than ever before is another, best practices and workflows expanding, putting your partner data in places you couldn't put it before. There's all these doors opening for partnership professionals. And we think the theme of kind of 2022 is like, let's get to work. Let's use these new opportunities, this new runway, these new resources to prove what we've all been saying that we know innately, that this stuff works, that this stuff is such a core reason that the modern tech company succeeds.
Yeah, there is that old adage that growth solves all problems. And I think what you're seeing here is tailwinds in the partnership space, growth in partnership team, growth in salary. And I completely agree. Like you have two options when you're in one of those very privileged environments where growth is solving all your problems. You can kind of get fat and happy, or you can go to work. And in these moments of low distraction, high yield, high opportunity, I hope that us and everybody else that's out there in the partnership space really makes the most of it, because this is once or twice in a career style set of circumstances for an industry like this.
So before you shut your laptop and get back to work and run back into the office and get ready to build the ecosystem, you can download the whole report. These are only 5 key takeaways. There are 64 pages of insights and lots of graphs and comparing the past 2 years. It's our most detailed report ever, and also we have 3 years of data to stand on, so we're starting to pick out some trends. Again, what we just presented is such a small part of what's in this larger report, but if you want to go beyond the screen and meet each other in person, we have our first ever conference called Supernode, which is taking place here in Philadelphia, May 17th and 18th. 200 plus partnership professionals. Again, when you're at most conferences, you gotta find the partner people, and then maybe one every 15 is perhaps someone who gets what you do. Not the case at Supernode. Everyone understands what you do. Everyone's open to sharing best practice. Everyone's open to partnering. We're really excited to have this event.
I cannot wait. I hope we see all of you there. It's already stacking up to be an event for the record books, and hopefully the first of many Supernos that we'll be holding.
So those are the 5 key insights, and we're going to leave you from pre-recorded land. Please put all your questions in the chat, and we are going to answer them in real time. So we'll see you there. Hello, everyone. Welcome to real life present time land. Happy to have you still be here with us. So Bob and I are going to hang for a little bit and answer any questions you have if you want to drop them in the chat. The reports link has been dropped in the chat. So if you want to furiously jam the print button, take it on a nice beach vacation, go ahead. Otherwise, we are here scanning the chat right now. Bob, any learnings after rewatching yourself, these 5 key learnings?
Outside of that, I always cringe watching recordings of myself. I think it was a wild ride this year. I think the data just keeps getting richer and richer, and all of the change that has happened in the last year inside and outside of our industry just made this one a roller coaster ride. So yeah, excited to jump in and cover the questions from the chat.
So we got most of them. The question about the Slack communities in the partnerships world. So there are 2 big ones that we're big supporters of, the Cloud Software Association and Partnership Leaders as well.
Yeah, both great groups. CSA has their big SaaS Connect event coming up this year. PL has a very robust wealth of resources for folks in partnership roles, ranging from helping find hires and jobs to peer-to-peer mentoring sessions and things like that. So 2 great organizations. We love them both.
Great question. Right in your wheelhouse, Mr. Moore. What do we see the future of PRM and CRM crossover being? How do they interact? How should they interact? What would you like to be able to see them do together?
Oh boy. Yeah, this is take me down off my soapbox after.
Yeah, Nathan, grab a Coke and sit down.
All the time we have left. Look, I think the one big happy family point of view, I think, is probably where to start, right? Which is to say that generally speaking, software in general over the course of the last decade has benefited greatly from the maturity of the API economy, the extent to which different disparate systems can talk to one another. Data can be shared between platforms and pushed back and forth and enriched and enhanced. And generally, the systems of record that different teams in your company use to do their jobs can talk to each other more. And they can all output their data downstream into a data warehouse, and you can get great analytics that cut across your entire company. This is absolutely true in the world of CRM and PRM. It's even true, excitingly, in the world of partner ecosystem platforms like Crossbeam and PRM, because if you look at our partner cloud and a lot of the integrations that are coming out in the next quarter or 2, a lot of them are actually in the PRM space. Like we're doing a lot of close work with companies that are in that PRM area where, Crossbeam becomes the system of record for how and where data actually overlaps, right? Like we unlock this data layer about what sits at the middle of all those Venn diagrams. And then PRM is very effective at doing the traditional 20 odd partner tasks that are really important to people running partner organizations, from partner registration to through partner and to partner marketing to lead registration and routing to all of the kind of glue that connects those things together, learning management, certification, MDF funds and all that stuff. So, there is kind of a play nicely thing that happens where hopefully over time, these systems don't feel so much like you're operating in a bunch of different silos, but instead feel like you've got the ability to work in a space that's most relevant for you, and you have the context from all the other tools that are most relevant for your colleagues. Now, in a world where that, there's this old, I forget who originally coined this phrase, but I want to say that this might be a Mark Andreessen quote, which is people only make money in software by bundling and unbundling, right? And if you look over time at where huge markets have been created in and around software, part of the innovation that comes with a new wave or a category disrupting play is that there's something about it that's either pulled a bunch of disparate tools together under one hood or deconstructed age-old tools that have gotten a little heavy in terms of the feature functionality they support. I expect to see some of that happening here too, right? And there are already no shortage of PRM companies that just do one or two of the things that PRM is really good at, and bolt-on white labeled kind of outsourced solutions from other tools to make that get done. The unbundling of PRM might be something to look out for. And the interconnectivity of the APIs that I talked about before might make that more possible than ever. So anyway, I'll stop there. It gets pretty wonky pretty fast, but great topic.
Nathan, if that helps that answer your question. Any resources you suggest to identify upcoming trends? Alexis, would love to know what kind of trends you're looking for. So we assemble this by just asking partnership professionals and putting it all together, but it's kind of hard to be predictive until we have the data, several years of data. So I'm very curious exactly what you're looking for. Maybe we can point you in the right direction. Stephen, where do you think are the best places to find comparative data on different partner programs? This is something that keeps me up at night because I'm trying to do this, or we are trying to do this, which is through our maturity diagnostic, maturity.crossbeam.com. We're asking people who run tech ecosystems to answer 14 questions, and we're starting to plot all the answers on a continuum and on a graph. Some of that is in this report. Actually, we hinted and previewed at some of that. But you should keep a look at in the next few months. We're going to start collecting and aggregating that data and helping change it from a diagnostic to help you benchmark. How do I stack up? Where do I have to go? Additionally, in the Crossbeam Weekly newsletter, which is going out later today, there's an article by Olivia Ramirez that's about how to level up one of those maturity criteria, and we publish those every so often as well. So hopefully that helps start to put you, on a ladder. But I recognize the actual amount of raw data is still something to be desired, something we're working on. What else do we got in here? Will Taylor asks, thoughts on tools that will help build integrations in the future instead of it doing all in-house, having something like Zapier or an iPass, I assume, take the lead. I can answer from the data, and then Bob, you can answer from the industry standpoint. In the data, we asked, in the report, you'll see we asked, do you build your integrations? Does your partner build the integrations? Or do you rely on a third party? And overwhelmingly, the two most popular answers were me and my partner. So there's still a lot of dollars and resources to be moved from in-house product teams to solutions like Zapier and to agencies.
Yeah, and I think I'm seeing in the chat, some names of companies getting dropped for sure. I think certainly the companies that have the most gravitational pull and have developed the biggest brands in the space are Workato and Tray. I think they've both done a really good job of answering the call of modern iPaaS needs, but also having offerings where you can kind of white label their systems into your own platforms to be basically the integrations as a service. So whether you need inside your own company, you need these pathways that are kind of like Zapier on steroids at an enterprise grade level, or you want to actually get kind of meta and have them power the integrations that are core to your product itself. Both companies have great offerings there, and watching them both evolve and watching that market evolve, it's kind of like a rising tide thing where you've got two rocket ship companies that are really interesting to follow. There's newer players that are emerging in that space. Our friends over at Pandium, I think, are doing a really great job of carving out some market territory around trying to do that specifically, that integrations as a service thing specifically. There's really awesome agencies out there. We've done some work with the folks over at Left Hook, around some platforming that they've done. And, it's kind of a hybrid software platform / services offering where you're able to accelerate your own integration development. There's no shortage of those. And I almost regret name dropping the handful I have because I'm going to get 20 emails after this from the many others that I didn't. But the important thing is, this does feel like it's going the way of, you get to a point where the idea of doing this entirely in-house without the benefit of the economies of scale that you can get from joining a platform or leveraging some existing platform will start to not make any economic sense after some amount of time. And I think we're starting to turn that corner a little bit, and it depends on your stage of business and your specific use cases. But I think the tech category around this is getting fairly mature from an iPaaS standpoint. I would expect, a wave of disruptive solutions to show up in the next 5 years that have different business models and pricing models and, open source offerings making it into the fray. But generally speaking, I think if your engineering leadership is trying to convince you that you should build 100% of this in-house, I would double click on that, because I think there's while these things might seem expensive out of the gate, the ROI, if they actually work and become a big driving force for your business, is substantial enough that they still cost a whole lot more than even a single engineering headcount in today's market.
I think we have time for one, maybe even two more questions. Real quick, while anyone gets any remaining questions in the chat. Staff writer, Crossbeam staff writer Olivia Ramirez dropped a resource to help you figure out how to best leverage an iPaaS. And then I dropped an article that Olivia also wrote detailing our own journey. And I think it clocks into 10,000 words. It's extremely comprehensive with templates and scripts and roles and everything we did to build our integration marketplace, which is called the Partner Cloud. See what else. Isabel asked, how do I access the Partnership Leaders Slack channel? I think it's partnershipleaders.com, and you can apply. No, you can pay. Also, Crossbeam paying customers are eligible for a compensated Partnership Leader membership as well. So sign up and pay for Crossbeam, or go to partnershipleaders.com. They're the two fastest way. Any other questions before we part ways? Alexis giving me a softball, partnership trends. It's what we do here every day at Crossbeam. So crossbeam.com/blog. We also have a newsletter if you want to subscribe to crossbeam.com/newsletter. Probably the easiest way, just once a week, every Tuesday. One's going out later today. You just get the latest stuff we're publishing. A nice passive way to keep track of what's going on. Any other questions before we last call, my friends? What do you think this will start being taught? I don't know what this means, but I'm gonna guess you mean the kind of trends and maturity stuff we're. Let me explain. Okay. While you explain, one thing that we're seeing is the need for professional education in the partnership space. So something we're thinking a lot about is leveling up, not only within the Crossbeam products, but also just like as a professional, what are some of the soft skills you need? What are some of the mindsets you need? What are some of the approaches? What are the kind of structures of thinking and first principles you need? We have something called the Partner Playbook, where you try to take that on, but from admittedly a beginner perspective, or someone just setting up an ecosystem. There's lots of room and lots of things we're working on for the more advanced and mature side.
Yeah, and hey, if we're not putting the cart too far before the horse on our strategic plans for 2022 here at Crossbeam, I think keep your ear to the ground for some more formalized kind of training / certification / education programming coming out that we're hoping to launch this year as part of our broader community and kind of user development efforts. So stay tuned for that. You can always shoot me an email if you want early access or curious to help us frame that out. Yeah, Nathan, exactly. That question keeps us up at night. How do we formalize it? But also every partner program is different. Every company is different. What are the commonalities? And one reason we do something like this report is that, you do it 3 years in a row, we can see things that are stable and best practices. When we combine that with the articles we publish every week, as well as the maturity diagnostic, we can start to piece together what kind of company thrives doing what kind of partnership motion. It's always a work in progress, and the ground is always shifting beneath our feet, but we're starting to be able to put something together a little more formalized. And again, as Bob said, not to tip our strategic plans, but it's something we're thinking a ton about. Cool. I'm gonna call that. If you have any other questions, you can email myself. I'm Sean at crossbeam.com. Also, insights at crossbeam.com pings everyone on the editorial and content team that can hopefully pull a resource that's helpful. But hey, thank you for braving the registration process and signing up and watching. We really appreciate you guys reading and commenting and emailing. Thank you so much. And hopefully you can use this report to accelerate your careers in ecosystems. Hope you guys have a wonderful day. Thanks, everybody. It's been fun.